welcome to yet another episode of the Money Control Show. I'm Sakshi Batra and this is where we talk about macros, markets and money. On the show today, we'll talk about tax planning and how can you achieve maximum financial benefits by planning your taxes right. We'll also talk about the new ITR forms, the changes that have been incorporated and the things you need to keep in your mind while filing your returns. And we'll also get you insights into the stock markets and the cues you need to watch out for in the coming week. It's the new financial year and the time is just right for new beginnings, especially when it comes to finances, be it your taxes or your investments. Starting today, we'll be doing a three-part series to help you do just that. Focusing on taxes first. Our guest today is Gautam Nayak, a prominent chartered accountant who will explain to us the various deductions we can get for our expenses. Welcome to the show, Mr. Nayak. Great to have you back. Now, let me begin by asking you first, why is it important to get our tax planning in order at the start of the financial year itself, and how is it different from investment planning?
See, what happens is when you plan for your taxes at the beginning of the year, you can ensure that you set aside funds in the appropriate person, in the appropriate hands to claim, to be able to spend from that person's income so as to be able to claim the maximum expenditure. So what is important is that you have to remember that in India, it's not the family which is taxed, it's each individual who's taxed. But what you want to do is maximize the family's wealth. So therefore, ideally, the person who's getting the maximum benefit of saving taxes, that is the person who needs to incur that expenditure. And that's why you need to have a proper tax planning for that right at the beginning of the year. And I think tax planning is not just about investments. There are certain expenses for which also you can claim a deduction. Say, for instance, Mediclaim expenditure, Mediclaim premium. You can have rent payments, you have donations, etc. So all these could give you tax benefits, and that's what you have to look at.
Right. Now, Mr. Nayak, there are certain expenses that give us tax benefits, but are also more important from our financial planning point of view. Medical or health insurance is one classic example of that. Now, how should we plan our health insurance in this financial year? And do also tell us about the tax benefits that come along with it.
See, many people are not aware of the fact that you can claim Mediclaim premium insurance, a Mediclaim premium as a deduction not only for yourself, but also for your parents. Now that deduction is separate from your own deduction. So you can claim a deduction of 25,000. If you're a senior citizen, it's 50,000. And for your parents, if they're senior citizens, you can claim a further 50,000. That's something. So therefore, effectively, you can claim really 25 plus 50 in most cases. So it's 75,000. Now, if your parent were to pay the Mediclaim premium, he may not be able to claim the full benefit of the deduction because his income may be, say, less than 5 lakhs or, he may get only a 20% deduction. But if you incur the expenditure, you may save 30% tax. That's something which you need to keep in mind and therefore, accordingly, pay the premium from the particular person.
Right. And what about life insurance and also the house rent that we pay?
Sakshi, the point is that, as I said in the beginning, you have to be able to claim the maximum benefit. And to do that, you have to decide who's the entity who's going to pay it, who's the person who's going to pay it, whether it's the husband or the wife. Because for life insurance premium, you can claim a deduction if it is paid on the life of the spouse, on the life of the children, on your own life. So then, therefore, you have to decide whether it should be the husband who pays it or the wife who pays it, or partly paid by the husband, partly by the wife. Similarly, in the case of rent. Now, even if you're not getting house rent allowance, you can still claim a deduction for the rent, and that limit is 5,000 rupees per person. So therefore, you might decide to split the rent between husband and wife so as to maximize the deduction that you can claim. So that is, I think, is something which is extremely important to decide at the beginning, who's going to pay how much.
Now, Mr. Nayak, this is also a time where we talk about planning for our kids' education and therefore applying for an education loan. What are the tax benefits can people or their children accrue if they take such a loan?
See, what you have to remember is that the interest on education loan is fully tax deductible. Now, you can take a loan for your own education, for your spouse's education, or for your children's higher education. So all three, you can do that. Now, that interest on the loan will be deductible for over a period of only 8 years. So therefore, you have to plan that who needs the benefit of the deduction the most. Is it the husband? Is it the wife? So accordingly, or is it ultimately the child who's going in for, who'll then start earning and will be earning substantial amount? Because in most cases, what happens is for the education loan, there is a moratorium period, and the moratorium period extends to the period of the course, and typically for a period of 1 year thereafter. So therefore, the person would have started earning subsequently and would repay the loan out of his subsequent earnings. The interest would therefore be paid also at that point of time as part of the EMI. So that's how you need to look at it. Where will the maximum benefit flow?
And is everyone eligible to take an education loan? And what are the conditions that we have to keep in mind? Like, when do we have to start repaying the loan? Whether it is after the kid completes his or her education or when he does get an admission to a college?
I think the repayment of the loan, typically, as I said, there's a moratorium period for the period of the course, plus for a period of 1 year thereafter. So the repayment will really start, all your EMIs will start after the moratorium period is over. And therefore, it's at that point of time, would the child be earning a large amount or would the parent be earning a larger amount? I think that's what would drive the situation. So if it's the parent who's going to be earning the larger amount, you would want the parent to be making the payment. The loan should be taken by the parent for the education of the child. And the parent can take a loan for the education of the child. It's not necessary that the child alone has to take the loan. So that is something which you need to factor in, that who will get the maximum tax benefit.
Now, Mr. Nayak, some people also donate money to charitable trusts like temples, NGOs, etc. What are the tax breaks we can get for such donations being made? And also, how does it really work? Is that tax deduction, and also whatever amount you donate gets deducted from the taxable salary?
See, so far as donations to charitable trusts are concerned, there is a limit to it. You can donate up to 10% of your income, and on that eligible amount, you get 50% as a deduction. So on that, obviously, you will save 30% or 20% depending on your tax slab. But I think so far as charitable trusts are concerned. But there is one more donation which I think you need to keep in mind, and this being election season, donations to political parties also qualify for a deduction, and that deduction is a 100% deduction without any limit. Now, of course, whether you want to donate to a political party is the big question mark. But yes, charitable trusts also do qualify. But as I said, unfortunately, those deductions are much less than what you would get if you were to donate to a political party.
Right. And lastly, Mr. Nayak, how should married couple plan their expenses so that they get maximum deductions benefit?
As we saw earlier, there are various deductions which are available to a spouse. Say, for instance, if it is expenditure on certain expenditure on the children, the person who's paying it would get the deduction. Similarly, say, for instance, interest on an education loan, who's the person who's paying it? That person would get the deduction. And therefore, or even your interest on housing loans, your house rent. So all these, I think you need to plan. Now, who has got maximum income? What is the tax slab? Say if the husband is in the 30% tax slab and the wife is in the 20% tax slab, you may want the husband to incur the expenditure. But if the husband has exhausted, say for instance, a mediclaim premium say is 40,000 for the family, and your eligible limit is only 25,000, you may want a situation where the husband pays 25,000 premium and the wife pays 15,000, and that maximizes your deduction. So it's a question of what is the eligible limit, what is the expenditure you're incurring, and what is your tax slab. All these three will help determine what is the deduction that you can maximize, what is the maximum taxes that you can save.
Well, thanks a lot, Mr. Nayak, for this insightful discussion. Moving on from tax planning to filing of tax returns now. The Tax Department last week has notified new income tax return forms for financial year 20. The new forms will require taxpayers to disclose more information. Watch this insight to find out more. The government has notified new income tax return forms. Besides, income assessees will have to disclose more details of professional and residential status in their ITRs for income of 2018-19. Individuals will have to provide full details of directorships in firms and investments in shares of unlisted companies, if any. The unlisted company's name, PAN, number of shares held or transacted by the person during the year will have to be given. This includes employee stock options in unlisted companies, also of those listed outside India. Those who hold directorships in firms or had investments in shares of unlisted companies will have to file returns in ITR 2 or ITR 3. The option of filing tax returns in physical forms is now available to only people aged 80 or more. The ITR 1 form will now be applicable only to resident individuals with total income of up to 50 lakh rupees from salary, one house property, and other income sources such as interest income. If an individual owns a property, she or he will have to specify if it is self-occupied, let out, or if there is any intention to let out. Earlier, the taxpayers were only required to fill in the amount of income from other sources. Individuals will also have to disclose the number of days spent in India and abroad. Overseas residential details along with tax identification numbers will also have to be given. For farm income, details of agricultural land location, size, whether it is irrigated or rain-fed will also have to be given. The season of filing tax returns is here, and what you need to know is that the IT department has introduced certain changes to your ITR form, which mandates tax assessees to disclose more details of professional income, property transactions, and residential status. Gaurav Chaudhary joins in to discuss more on that. Thanks a lot, Gaurav. Appreciate you joining on the show. Let's start one by one, first of all, with the Sahaj or the ITR 1 form. So what are the changes which are applicable from this financial year onwards, or what are the restrictions also imposed in this form?
So ITR 1 is essentially for individuals whose salary income is up to 50 lakh rupees,
right,
and who has probably one house property and other sources of income,
sure,
like interest income. For anybody who is earning more than 50 lakh rupees, there are different forms. Likewise, for companies who have that have a turnover of about 50 lakh rupees, they have to use the form ITR 4 for filing returns.
Right.
But the most important thing here to notice this year is that anybody who holds a directorship in an unlisted company or holds any shares in an unlisted company,
right,
will not be allowed to use ITR 1,
okay,
which is very different from last year. It's a marked departure. So they'll have to use the forms ITR 2 and ITR 3.
Okay.
Effectively, this means that the government is very serious about clamping down on shell companies.
Right. So what kind of information will these directors who will now be filling up the ITR form 2 or maybe 3, what are the additional details they'll have to furnish now?
So there are lots of additional details. In the previous instance, they were just allowed to, they were just asked to disclose the income.
Right.
Here they have to give the details.
Okay.
So they have to give their director's information number, which is the DIN number, which is a unique number. And so if they're a director in an unlisted company, they'll give the DIN number of that company for which they are directors. They'll also have to give their own PAN as well as those details of the company as well. The number of shares transacted of this unlisted company during the year, and if they have overseas directorships,
correct,
or shares of overseas unlisted companies, those will also have to be disclosed. Clearly, the government, these are attempts by the government and continuing attempts by the government to clamp down on tax evasion.
Right.
Because if details are being sought, then the government still believes that there's lots of unlisted companies that are being probably used to funnel hidden assets and undisclosed income.
Absolutely.
And the government is now trying to mine that piece of data.
Absolutely. And let's now talk about the ITR 4 and 6 forms. So who can use these forms, and the businesses who will be filing them under these forms, including startups? What are the details that they will have to give now?
So the big changes for the businesses are not as much as it is for individuals. For startups, as we know, there are new forms that have come in, and the rules have been eased considerably, given the controversy surrounding the angel tax, and the government have really eased those rules. In the case of startups, ITR, the new ITR forms will probably call for disclosing of more details about investment by investors and the number of shares that that the promoters would have diluted. But the big change here is obviously of individuals, including details that they have to share of their residency status.
Right.
So if they have if they have stayed overseas for too long, those details will also have to be shared.
Absolutely. Now, also talking about, do you think these changes will make filing of tax returns more complicated? Because the idea that the government has been going forward from last year as well was to make the whole process simplified and make it maybe restricted to just one page of form. So will these additional changes actually increase the number of pages that they will have to file, or will it still remain the same?
I don't think it will be complicated for those who do not have undisclosed income. If there is undisclosed income, and if somebody has an intention not to disclose investment in unlisted companies, it could get a little complicated. Because then they have to disclose those details. But the good thing here is that from this year onwards, processing of income tax returns will be done in a very rapid time. And also physical income use of physical forms of income tax return forms is being only going to be allowed to only for citizens who are above the age of 80.
Yeah, so that's what I was coming to earlier. The physical, form also could be filled up by those people who had an income of less than 5 lakh rupees. So will they not be now allowed to use that form?
So it's a clear step that the government has. It's a big step towards actually moving completely towards electronic filing and electronic processing. And if anybody who is above the age of 80, only those who will be allowed to use physical forms means anybody who is below the age of 80, and there are a very large number of assessees who are below the age of 80, will not be allowed to use physical forms. That's a big step forward towards completely moving towards a digital processing and digital income tax filing.
Right. You also did mention about the residential status. Now for NRIs or people who claim status outside of citizens of outside India, persons of Indian origin, what is the kind of details they will require to furnish about the residential status?
So well, once they have to say how many days they have over the last 365 days, how many days they have stayed in India. Please remember one thing, income tax return is about income drawn in India or generated in India or earned in India. If an NRI has not earned any money in India, I don't think that person need to worry too much about disclosing details. But if there's some degree of income that is being generated in India, then those details will have to be disclosed. Over and above that, investment in overseas shares, shares of overseas companies, as well as directors' information details of these companies, equity transaction in overseas companies will have to be disclosed.
Right. So do you think all these changes that have been incorporated by the IT department now will actually just curb all the loopholes that existed because of which all the people actually evaded taxes so far?
Yeah, so what the government is trying to do, and we have seen this, the government has been very, very serious about clamping down on shell companies. And the data mined from demonetization and later through GST also to some extent, we know that the government has ordered shuttering down of hundreds of thousands of shell companies. And there is now data with the government which clearly show that many such shell companies, and which are essentially paper companies with no operations, were being used and continue to be used for funneling of undisclosed money. The government wants to close that tap altogether.
Absolutely. So do you think in the end, I want to ask you, this will also help the government achieve its objective of increasing the tax net?
The tax base has increased considerably over the last 2 years. We are now above 7 crore people who are filing taxes compared to about 3.5 crore, say, in 2014. So that's a big jump. A large part of it is also because the government claims is also because of demonetization, which is widened the tax base considerably. And if it continues to rise at the same pace, I don't think we are too far away from reaching an individual income tax assessee base of 10 crore.
All right. Thanks a lot, Gaurav, for sharing all that insight and for sharing all that very important information with all of us. And with that, we also hope that all taxpayers have got a fair idea of what all will be the additional requirements by filing of your returns this time around. Moving on to markets now, Santosh Nair, editor of Moneycontrol, joins in with all the action in the stock markets and cues for the week ahead. Thanks a lot, Santosh, for joining in. Now, we witnessed the first phase of polling for general elections 2019 this week. What were the cues that markets picked up and what was the action on D Street?
Well, thanks, Sakshi. We're seeing some kind of profit taking in the market over the last few days. And because share prices have been rising now for almost 6 weeks in a row, some bit of profit taking is inevitable at higher levels. But what the market also is a bit worried about is that we saw both the major parties announce their manifestos, and in both the manifestos, economy and development have just about got a passing mention. So that's something that the market is not very happy about. A few days before that, SkyMet had forecast below average rainfall. So that is also a cause for concern. While liquidity flows have been very strong, liquidity in itself cannot keep pushing share prices higher. So we are seeing some bit of profit taking, and probably the market could see some consolidation in the short term.
Well, not just elections, Santosh, even the earnings season has begun. What are the big expectations from Q4 corporate earnings this time around?
The general expectation is that there could be some bit of slowdown in the pace of top line growth across sectors, and they could be more pronounced in few sectors like automobiles for one. That's clearly one of the problem areas at the moment. So the expectations are not all that great. You could see some pockets of outperformance, particularly by the IT sector, but on the whole, it doesn't look like there'll be some earth-shattering numbers, and that's a cause for worry because share prices have moved up quite sharply over the last couple of months, and now valuations are beginning to look expensive. So while you've been seeing a good amount of institutional money coming in, expensive valuations clearly is a cause for concern, and that could result in players being more cautious. You may not see the kind of increase in share prices that you saw over the last few weeks.
All right, Santosh, and what are the big triggers to watch out for in the coming week then?
Well, probably most likely the market could react to news on the poll front, the kind of news flow that might come in. And besides that, again, the focus will be on liquidity, foreign money, foreign fund flows, which have been pretty strong, about close to about 60,000 crore of net buying by foreign funds since February. The numbers coming into mutual funds were strong for the month of March, but that's also because a lot of money has come into equity-linked saving schemes because of tax consideration. So that would not really be a very good indicator. You're seeing profit taking in some sectors like banks. The worry there is that probably if whichever government comes to power, and should they decide to persist with welfare schemes, invariably the burden will be on banks. So that's the reason you're seeing pressure on banking stocks. So on the whole, banking stocks could continue to remain in focus in the near term. Other than that, the focus largely will be on corporate earnings. Based on the numbers, you could see individual stocks reacting.
Thanks a lot, Santosh, for sharing with us all those details. And with that, it's also a wrap here on the Money Control Show. But you can catch up on all the news from the world of business and finance on our digital platform, moneycontrol.com. Many thanks for tuning in.